Hello friends, this is Raj Sastry from Raja Option Trading. Today is March 5th, 2023. Hope you're all doing well. In today's segment, we'll take a look at how to make a great living by trading options. So with that, let's jump in and get started. Look, we'll start with a quick market update and then go into how to make a great living by trading options. Market perspective, we got here S&P 500 trying to make a move, as you can see here. Nice 2 days of uptick here, and same story, Dow Jones is going higher and Nasdaq is also trying to make a great comeback here. And all these stock ETFs, look, we got Russell 2000 trying to go higher. It's a future, and bonds are trying to make a comeback here. Interest rates are coming down, which is a good sign here. And we got crude oil making a huge comeback. This is taking energy sector up along with the crude oil here. And gold is trying to make a small comeback here. And we got dollar trying to weaken slightly. That's a good news for the stock market. That's a quick general market update here, and now we will jump into how to make a great living by trading options. When you trade the options, you got to get the direction right, otherwise you're going to be losing money. And most people trade options in all, most of the people look at implied volatility without regards to volume and total open interest. That's the recipe for a disaster. So if you want to trade options, you got to be selective. I would say super selective. So what I typically do is I typically have two lists. That's pretty much. I take you to my thinkorswim here, and I got ETF list here. ETF list is very important for me. Most of the times I trade ETFs because I don't need to worry about the direction too much, and I can double down on these ETFs most of the time. Especially I love to look at two things in these ETFs. First one is really the RSI, or relative strength index. So if I want to sell put option or a put spread, I always make sure the RSI is below around say 50, below 55 or so. Then I look at the implied volatility. Thinkorswim platform calls it IV percentile, but it's really a IV rank. I want to make sure when I'm selling put options, I want the IV rank to be slightly above 10 at least. In these ETFs, you don't get huge IV percentile, huge number, and as long as it's say maybe 10 or so, it's good enough. You could sell put options or put spreads. And my go-to ETFs are really, I love SPY, QQQ. These are my two go-to ones. I always sell put options or put spreads on these as long as the RSI, as you can see here, is below 55. And then we got here IWM, which is small cap Russell 2000. This is my another go-to ETF for selling put spreads, especially when RSI is below 55. Look, right now RSI is 55. You can still sell and make some great money. And then you got one more here. I love DIA. I sell put spreads on DIA when it's lower, when the RSI is below 55. Right now DIA is a great candidate to sell put spreads and make money. And I also love SMH, which is semiconductor ETF. I do it all the time. And normally what I do is I sell put spreads on these all day long, as long as RSI is below 55 or so. I don't pay too much attention to IV percentile or the IV rank, because these ETFs generally have got lower IV rank. You don't need to look for an IV rank above 50. That happens typically during these stocks with the earnings season. But when you're selling put spreads on these ETFs, you don't need to worry too much. Pay attention to the RSI. when the RSI is below 55, you can sell those put spreads. And if the if the IV percentile is higher or IV rank is higher, that's a good story. Look, SPY and QQQ both have got IV rank above 10, which is a great one here. And IWM, you can make a lot of money. Look at that IV rank here, 32. That's a good one here. And we got DIA, which is very low. Even this one you can make some good money here. SMH, it shows 0, and I've been selling put options on this one and put spreads, and it's a great one to make some money. The reason I love these ETFs, these are huge ETFs, as you know here. Look at the trading volume. These are very liquid. Look at this trading volume in SPY, QQQ, very good here. And even DIA, 3 million shares, not a small amount here. IWM, very respectable. Normally, most of the times I do it in IWM, QQQ, QQQ and SPY, and sometimes I also go into both DIA and SMH. SMH is great one when even the semiconductor chip tanks. You sell put spreads and make some great money. And in addition to these ones, I also do put spreads on the corresponding futures. For example, for SPY, we got SPX as the future here, or the index, not the future index. You could sell put spreads on SPX and make a killing. And same story, QQQ. If your account is smaller, I would not recommend doing on NDX, because typically it's got a little bit wider width in those put spreads. But you could do on IWM. It's got $5 wide and $10 wide option spreads. You could do that all day long. And you could also do it on DIA, which is a DJX. You could do it on that too. So with that, what I will do is I will take you to this platform here and bring up SPY, so that you understand how to consistently make money on a day in and day out. I typically don't want to go into very low days to expiration here. I love, say, for these ETFs here, I love to go, say, around 40 to 60 day out here. Look, 47 days looks good here. You could go here, and right now, as you can see here, I could go here. Look at the chart very quickly before you sell some of these put spreads here. What chart is telling is really, as you scan through here, look, we got Bollinger Band here. From a Bollinger Band perspective, SPY is trying to take on its middle band in Bollinger Band here. Right now, it's acting as a resistance level. It can pierce through this and go higher. And RSI perspective, 52. I love when the RSI is below 55. IV rank is a double digit, which is good enough for the ETFs here. In a good setup here on the balance, volume is going higher, as you can see here. And RSI is picking up, tells you momentum is increasing. And then you got IV rank is 18, which is bumped up slightly, as you can see here. That's a good enough setting for us to begin with. And now we can leg into the put spreads here. I would say click on the trade tab here, and look, when you sell the put spreads here, always watch delta. And I will show you here. Look, we got delta right here. Keep watch on the delta here. You want the delta to be around, say, 10 or 15, so that way delta is also probability of expiration. So you could use the delta here. Look, we got two things here. One is probability of, I got here probability of touch. Probability of touch tells you what the percentage, what's the likelihood of price touching that strike price here. Look, right now we got SPY price at 404, as you can see here. And if you look at one of these things, look at 360 here. What it's saying is really probability of SPY touching 360 by the expiration which is 21st of April 23, is 16%. That's what it's telling you by looking at the probability of touch. And some folks will also look at this delta, which almost tells you the same thing. Around 7, there's a chance of 7% that price will hit 360 by this expiration date. So what you could do is really you could look at delta and look at delta 15 or so here, and look, we got delta 15 right here somewhere. Look, we got delta 15 here. And you could typically, I love to look at these round numbers. Look, we got 375 here. Right now the ETF price for SPY is 404, and it could go into 375 here. Probability of touch is 32, as you can see here, and delta is around 14. So you could sell a put spread here, and you could say just go here 375. Let me delete this. You want a spread here, you could do here sell a spread and go in here vertical, and 375 we are selling at 375, and we can buy back depending on your account size. You could do $10 wide if your account is a little bigger. If you do $10 wide, you would do 365 right here. Let's come down slightly. There you go. You do $10 wide spread. You bring in $1 credit here. Look, we got $1, which is $100, and you're basically taking a $10 wide risk here. Look, 375. You're selling at 375. You want the price to be above 375, and you're buying back at 365. You're taking a $10 wide, risk here. For taking that risk, you're collecting $1. For an ETF like SPY, that's a very good approach here. I do it all day long for an ETF like SPY, and if your account size is smaller, you can do 375 and 370, which is a basically $5 wide here. You could do that too here. If your account size is small, you're collecting a little bit less money, which is $56, but you're also taking a smaller risk, which is $500. And if you want to look at the risk profile of this here, you can go to my favorite tool, which is optionstrat.com here. I might have it right here, optionstrat.com. You could go here to build, and you could go into the put spread here, bull put spread, and you could bring up SPY. All right, so let's look at SPY. So what we're doing is 21st of April, that's where we are. There you go, that's a good one here. And let's see here, they got some daily tip. You could look through here. These folks will give some daily tip all the time. I love those daily tips. And now we could go into 375, and let's do 365. You could do 375, 365. So let's go here. So 375, we go right here, and 365 we buy back here. There you go. It's a $10 wide spread, as you can see here. You're taking a risk of $1,000. That's your estimated margin, as you can see here. Your net credit that you will receive is $101, and your maximum profit is the money that you received here, as you can see here, $101, and your chance of profit is 89%. That's a great number here. Many times, as when your estimated margin is higher and your max loss is higher, that's when you get higher chance of profit here. Typically put spreads have got higher chance of profit, and I love to do this for these ETFs like SPY, QQQ, IWM, even DIA, SMH all day long, as long as RSI is below 55, and sometimes I do it even when RSI price, maybe say below 60. That's also a good one here. So I would say try this out if you're not done already. It's a great one here. You could do this all day long and get some money. And one of the reason I love to do it on these ETFs, I just leg in. For example, I might sell one put spread here, and if the ETF SPY comes down, it happens all the time. There is some news. Some Fed had talked about increasing the inflation and increasing the rates, and ETF falls down. When that happens, just roll it down here. Instead of 365, 375, you could go here. You could say you could come here and you could say 370 and 360, sell one more put spread here. So we got here, you're collecting $76 again. And if it falls further down, you can go further down here. And, basically you could, even sell further here, 355, 365. If the market goes down here, you also go down along with the market, keep collecting the money. If the market goes higher, you also go higher and collect some money here. And if the stock market goes higher, for example, SPY, jumps too much higher, then you could sell some call spread here all the way up here, so that way you can make some money on the other side of the house. So this is one of my favorite strategy to make some money without taking too much risk. For example, SPY jumps higher, stock market went up by 1,000 points. What I would do is I would just add one more spread here. In that scenario, I would be buying a call. I would say go all the way top here, say 430, and you could this is what we are buying. I would say 440 here, and you could really sell a call here, and you could sell a call at say for 430 here. There you go. So you're selling a call at the top here. You're collecting a nice $154, and your max loss is 846. Look at the chance of profit here. It's 80%. So this way here, as the market goes up, if the RSI is overextended, say above 65, 70, you sell call spread at the top here. As you can see what you've done. If the market falls big time down, then you basically keep selling the put spread at the bottom here below the stock price. So this is one of the best ways to make money, especially these huge ETFs like SPY, QQQ, IWM. Those are my favorites here. And you could do the same thing on the respective indices like SPX, NDX, IWM. You could do same thing. Even DIA or DJX, you could do same thing here. One of the great thing about this strategy is you don't need to worry about the earnings. Did the stock collapse after the earnings? Is there some accounting scandal? Is that drug got approved? You don't need to worry anything about that. And as you know, generally these huge ETFs like SPY, over the period of time, they always come down. So this is a great strategy. If you have not tried this already, I urge you to try this here. You could do this for 47 days out or about 45 days out, we're doing it here, or you can do it even up to 60 days out. When you are selling the credit spread here, and always try to sell the credit spread. When the stock market is down, sell put spread. When the stock market is up, gangbusters, RSI is above 65, sell a call spread like we're doing it here. That's one of the great way to earn money and do great in the stock market by doing the options trading. And when the stock market comes down drastically, you could also buy some call spreads here. For example, SPY collapsed for some reason. Powell decided to increase the rates by 50 basis points. If that happens, you could basically buy some call spread here, and you could go here, add, and you could say buy call, and you could go all the way down to say, right now stock price is 404. You could say 400, and you could buy a call spread here, and you could basically sell a call, say around 10 here, and you could buy this call spread here. If SPY goes higher, you will make money with this strategy here. This is really buying the call spread because you already sold a put spread here, sold a call spread. That will pretty much finance your buying the call spread here. So this is one of the great strategy to make some money and earn profit by trading the stock options here. And one more thing, so this is my list. As you can see here, this is the let me go back here to the products and market watch here. Look, this is a small ETF list here. I typically don't go down the food chain here. I go QQQ, SPY. These are great ones. I look at IWM, and I look at DIA and SMH. That's pretty much just as you can see here, just 5 ETFs. You can do great money by just trading these 5 broad ETFs, with the exception of SMH is not a broad one here, but the other ones are broad. I would say DIA, SMH here, and SPY, QQQ, and IWM. That's pretty much. Don't need to worry about market and earnings and constant thread of news in the market. Don't worry, tune that out and just trade these ETFs and make a killing. All right, next thing, for the folks who are not super happy just with the ETFs, I also have a small list of stocks here, and as you can see here, I got here a stock list here. I call it high volatility stock. It's really not high volatility stock, it's just a list of stocks here. Look, this is a very small list of stocks here, and I typically don't, when I'm trading options, I don't go down the food chain too much here. Look, it's a very small one here. I would even remove some of these like electronic arts which are not doing great off late here, but this is a very small list, as you can see here. And normally I love to look at volume. If there is not good enough volume, I don't want to trade options, because I'm not here to be a hero. I just want to make some good money by trading these stocks in these options in these stocks here. Look, my favorite is the ones at the top here: Tesla, Apple, Amazon, AMD, Meta. It's already gone up. I don't do too much. I would say, these 5 stocks here, I take, basically look at these very closely here, and I trade this all day long. Same strategy here. Tesla is a great one here. Look, RSI is below 55. At this time, I'll be, selling put spreads on Tesla below the current stock price here. And as you can see here, we can go back to trade here. Tesla is one of my favorite stocks to trade. Favorite options to trade stocks. Favorite stock to trade options. So I could say here Tesla here. And look, it's a rich one. I like it. It goes up and down too much here. Instead of trading the stocks, I love to trade options. Same story here. Keep watching the probability of touch or even delta. You could go around delta 15 here. Look, delta 15 right here. I'm a little more conservative. I don't just go to delta 15. I go around delta 10 or so here, which is right here. As you can see here, 150. I will sell this put spread here, 150 and 140. And look, that's it. $10 wide spread here. You're making $108. As you can see here, you're taking $10 wide risk here. And you can go back here to my favorite tool here, and I would go in and say Tesla here. There you go. And so what we did is ours is 21st of April, 150, 140. I could go here. I got here call. I would remove this one here. Remove, and I would add a put here. I'll be selling a put, and I would be doing it say 150 I'm selling, 140 I'm buying. So 150 right here, and I'm buying. So buy put, and I'm doing it 150 and 160. There you go. $10 wide spread here. Let's go all the way back here. There you go. So So it's other way around. So we are doing 150 and we are buying back at 140, as you can see here. So look, we are making good $108. That's our net credit. Max loss is 892. That's basically 1000, which is which is really the distance between the two strike prices times the times 100 minus the credit received. That's 892. And look, chance of profit is very high. I do this all day long. As long as Tesla stays above 148, which is 25% below current stock price, you would make money. One of the great strategy. I do this all day long. For these huge stocks like Tesla, Apple, Amazon, Google. One of my favorite strategy here. All right, so you could do the same thing here. I would delete this. Go back to this list here, very small list. I do it all day long. As long as the RSI is below 55, look, most of these are below 55 now. I do it for Amazon, which is below 55. Look, RSI is 47. Apple, you could still do it, but I like to do it on a down day. When the market is down, that's the best time to really sell these put spreads, because when the market is down, typically implied volatility goes higher, and even typically when the market is down, volatility increases. That's when you get good money selling these put spreads. As you can scan through here, we got AMD. On a down day, you could sell some put spread here, and I love to do it on even my favorite stock like NVDA at this time. Meta I would not do right now. RSI is super hot for me. I would wait till it cools off here. Meta, I would be selling a call spread at the top here instead of selling a put spread. And you got other stocks like Square is a good one here. On a down day, I would sell a put spread on Square. And Snowflake is one of my favorite stock to sell put spreads. Earnings is done. Next earning is 417, as you can see here. Right now, you could sell some put spread because stock fell off here. On your favorite stocks, don't worry about the IV percentile here or IV rank. You could still sell some put spreads, make some good money here. For folks who always chase the IV rank, they tend to lose because they may not be looking at the right stocks. If you are convinced about the stock, then you can double down. As the stock goes down, you can add one more leg, buy one more put spread, and make some more money. Look, typically, you have to be careful. Don't buy all the put spread at once. Always leg in, and if the market falls, you basically sell one more put spread at a lower strike price. That's one of the reason this works great for this big ETFs like SPY, QQQ, IWM, and DIA, because you don't need to worry about these ETFs. They've been there for 10, 20, 30 years, and there is nothing they can go bankrupt. On the other hand, if you want to do it for the stocks, always look for the huge market cap stocks which are doing well, like Tesla, Apple, Amazon, Google, NVDA, AMD. They all check out here. You could go with those, and typically don't do it for high dividend paying stocks like some of these energy names here. I would not do those, but these high volume stocks, you could always sell some put spread underneath and make some great money. And always sell this put spread when the market tanks big time. There is some negative sentiment in the market, and look at these triple digit down days in the Dow Jones Industrial Average. Those are the days you sell these put spreads. Don't sell naked puts. That's not worth your while. Even though you get little more money, it's too much tail risk, as we say here. If the market tanks, you'll be you can't leg in because you already consumed all your margin. It's not worth your while. So I would say go with the put spread here and make your money, and don't worry. Just go with the $5 wide if your account size is low. If the account size is big, go sell a $10 wide spread. If the market jumps higher, if the RSI is above say 65, sell call spread at the top. If the RSI is below 55, sell put spread at the bottom and earn consistent income. So with that, thank you very much. Happy investing and trading. Please subscribe.